the conversations you have with traditional finance people today sound very different than 4 years ago.
Right.
4 years ago, everybody thought we were crazy. Fast forward to today, it's almost like everybody thinks, we saw something so genius. But to us, the concept hasn't changed. We've been doing the same thing. It's just how people perceived us that has really changed. Everybody now is getting very, very clued in to this opportunity. And you're seeing very, very big capital move into the space. You're seeing the cost of borrowing get bid down aggressively because there's now more and more capital looking at the fact that companies like Ledn have 0% loan losses in all of our track record.
This is the Blue Collar Bitcoin Podcast, a show where average Joe firefighters explore the most important monetary technology of the 21st century. We talk Bitcoin, we talk finance, and we talk shit. We appreciate you stopping by yet another weekly installment of the Blue Collar Bitcoin Podcast. In this episode, Josh and myself, Dan, sit down with Mauricio Di Bartolomeo and Mario Gibney from Bitcoin lending, borrowing, and financial services company Ledn. As you'll quickly learn in this discussion, Ledn is a very unique company with a highly principled Bitcoin forward perspective. They are the first ever digital asset lending platform to undergo a formal proof of reserves attestation, where an independent public accountant regularly attests that the company is properly accounting for client assets. To put this plainly, this company mirrors and embraces the transparency, accountability, and auditability of Bitcoin itself. Mauricio is a co-founder and the CSO, and Mario is their director of community. During this chat, the four of us cover topics including each of our guests' fascinating backgrounds and journeys into Bitcoin, including how growing up in Venezuela has influenced Mauricio's perspective on inflation, how Bitcoin may help restore productive economic incentives, the importance of discerning and recognizing risk in the crypto space, and why proof of reserve should, and likely will, become industry standard. After researching Ledn in preparation for this conversation, and then subsequently having this conversation with Mauricio and Mario, they've impressed the two of us to such an extent that we've agreed to partner with them, and we're pleased to announce Ledn is the newest sponsor of the Blue Collar Bitcoin Podcast. If you've listened to this show much at all, you've certainly noticed that we advise our listeners to be careful, manage risk, and not get over-leveraged. And that does include ensuring that any borrowing and lending decisions make sound mathematical sense based on your lifestyle and specific situation. Having said this, where available in your jurisdiction, Ledn offers a menu of powerful financial services. Keep ownership of your Bitcoin and access dollar loans with Ledn Bitcoin-backed loans. Harness your Bitcoin holdings to buy a new property or finance the home you already own with the upcoming Ledn Bitcoin mortgage product. Save Bitcoin and USDC to have access to Ledn dollar loans and trading service, if available. You can look into Ledn's well-architected menu of services at ledn.io, that's LEDN.io, and details about both our guests, including their Twitter handles, will be down in the show notes. In addition to the weekly podcast, you can engage with more of Josh and myself, Dan's ideas and banter by following our shared Twitter handle, @blue_collar BTC. We are always pleased to announce that Blue Collar Bitcoin Podcast is sponsored by COINKITE. If you've been in Bitcoin for more than 10 seconds, you've likely heard of the Cold Card, simply the most trustworthy Bitcoin security hardware in the business, and something the two of us have relied on for years. You've also likely seen the Block Clock, that handsome must-have display art piece sitting in the background of every shot of every serious Bitcoiner on planet Earth. In addition to these items, COINKITE offers a number of other products including the Seed Plate, a simplistic and well-constructed option for metal seed backup, the Open Dime, and several new products including the Sats Card, Tap Signer, and a brand new Cold Card Mark IV. We actually spoke in detail about some of these products last week with NVK, and you can access further details at coinkite.com. If you are buying a Cold Card, feel free to use promo code BCB for 5% off purchases. All right, hope you enjoy our rip session with Mauricio and Mario from Ledn.
All views and language expressed by the hosts and guests in this podcast are solely their personal opinions and do not reflect their employers or organizations they are associated with. Do not treat any of the content in this podcast as investment advice or as an inducement to follow a particular strategy. This podcast is for entertainment purposes only.
Mauricio, Mario, how are you boys today?
Doing very great, guys. Thank you so much for having us.
Excited to be here.
We're pumped. We were talking a little bit about your Ledn products before we clicked record, and we'll explore a lot of those in this episode as well as your backgrounds. I think one of our main thoughts is we're not naive to the fact that in a Bitcoin future where value is transferred over this protocol, there's going to be the need for financial services, lending, and it's our hope and expectation that that's going to be done in a more transparent, open, effective way. And it's good to see you guys kind of leading the league on that. Why don't we start sort of on the Ledn end, and then we'll go backgrounds before that. What is sort of the genesis of Ledn, and then each of you, what are your capacities there?
Yeah, so I'll give you a quick genesis. It's actually quite simple. And I'm Mauricio. I'm one of the co-founders, and my official role now is Chief Strategy Officer. And the original genesis of Ledn is we didn't want to sell our Bitcoin. We wanted to keep mining and grow our mining facilities, and we didn't want to sell our Bitcoin. And we wanted somebody to lend us cash and take the Bitcoin as collateral because we thought we were giving up great collateral. And in our view, Bitcoin was amazing collateral, like the best collateral. And we thought it was crazy that nobody was doing this. And they thought we were crazy for even wanting this. So immediately, Adam and I kind of bumped our heads, and when we were like, enough times where we can get financing for a Bitcoin. And there were some offerings out there, but we didn't really love how they were being presented to the market. And we said we can articulate something better. We think we have a pretty good shot at doing that. And we found some investors in the team that really believed in us, and we took a crack at it. And something that started out pretty simple snowballed into now a pretty complete suite, I would say, of financial services.
The pristine collateral comment is hard to wrap your head around at first, but then once you understand how this thing works, it clicks so clearly in the sense that this is collateral that's in your possession, right, as the lender. Like in other lending environments, you have a claim on that, but you don't actually possess it. And this is a revolutionary concept that a lot of people haven't wrapped their heads around. This is the world you live in. What do these conversations look like when you're talking to other people, if you are rubbing shoulders with people in traditional finance or lending, where you're like, do you understand that this trades 24/7, 365, and that you possess the keys? You can liquidate and take it whenever you need it. It's perfect in terms of its design as collateral.
In addition to all that you just mentioned, it's global. For the first time in the history, I believe, of modern finance, there is a collateral, one type of collateral that I can take from Colombia that'll be no different than collateral in the same manner from Canada or the United States or Europe. And it allows us to really treat people in the same way because it's the same risk profile in many ways. Once, obviously, the client has passed full KYC and all this stuff, but it allows us to really, really treat people and give them the same cost of financing, the same, prepayment and great interest rates, etc. And a lot of our loans go to Latin America, which is an area of the world that we've chosen to focus on, because they don't have the same access to credit than many Americans do. We can fund a loan in 24 hours. I would bet you like 99% of banks south of Texas can't really claim that. And so it's pretty fascinating. But on top of all of what you just said, the conversations you have with traditional finance people today sound very different than 4 years ago.
Right.
4 years ago, everybody thought we were crazy. Fast forward to today, it's almost like everybody thinks, we saw something that's so genius. But to us, it was always, the concept hasn't changed. We've been doing the same thing. It's just how people perceive us that has really changed. And I find that fascinating. But everybody now is getting very, very clued in to this opportunity. And you're seeing very, very big capital move into the space. You're seeing the cost of borrowing get bid down aggressively because there's now more and more capital looking at the fact that companies like Ledn have 0% loan losses in all of our track record. And we can, to your point, liquidate 24/7. You can't sell a wing of a house. You can't, you can partially recall a car, but you can really, in real time, close out a Bitcoin loan if you need to. And so, as a lender who's worried about risk, there's no better value prop.
As you guys said, 4 years ago, everyone thought you were crazy. I know 3-4 years ago, even a couple years ago, like if you were in the United States were trying to get a mortgage and you had, say, a significant amount of your net worth in Bitcoin, they look at you like you were crazy. and they'd say, effectively, you're broke in our eyes. Is that changing at all in the traditional field, in the traditional banking system? Or if I want to get a mortgage today, am I still going to be looked at like I'm an insane person for having, a significant amount of net worth in Bitcoin? And they're going to be like, this is not something we can use as proof of any kind of wealth.
To them, it doesn't even exist. It's like it's not real money, right? It's it's getting there, but yeah, it's even worse than that. That I know people who have had a large stack of Bitcoin in Canada and have wanted to purchase real estate out in Vancouver, and even if they sell their Bitcoin for dollars in order to get a down payment, they would it would need to sit in their bank account for 6 months or something crazy like that before they're allowed to use it. For a deposit for a house. So it's it goes even beyond them not really, validating the, even after you've transferred it back into the legacy system, there are hurdles there, but I'll let Mal comment on the other parts of it.
And who wants to let their Bitcoin sit in dollars for any period of time? I mean, that's crazy.
Exactly.
That's crazy.
It's heresy.
There are so many things that are dysfunctional about the existing system, and a lot of those things have a reason, whether it's banks have a requirement to show that they have, screened the proceeds of the funds, etc. And so, I guess to make a long story short, the banks, tier one banks, like what you would think of Bank of America, Wells Fargo, these big guys, they still think you're crazy. Like, to them, it's just one big goose egg still. But there, we announced the first Bitcoin mortgage. There was a wait list for a product that we announced in December, and the response to that has been amazing. And that largely came really because our clients were coming to us to take these big Bitcoin back loans because they weren't being able to get any financing from their banks. And they came to us and they said, "Hey guys, I'm going to take a big loan. I'm going to go try to buy a house. I'm going to go try to refinance that transparently to try to get a lower cost of capital and repay as much as I can from the loan." And listen, we're all for that because we want our clients to get the lowest cost of capital. Like, happy clients stay and happy clients come back. So we're not going to try to sell you into a product that doesn't make sense if you could get a better cost. So anyway, they bought the house and they kept coming back. And then even after that, they came back and they said, they're not giving me anything. Like, I can't get nothing. Like, I would much rather just deal with you guys. Is there anything you guys can do about this? And it was the request came one time. And then the request came a second time, and then a third time. And then by the third time, then we said, okay, is there any way we can pilot this with one of our trusted clients? And so we put together a little pilot form. And, he told a friend, and a friend told a friend. And then we started getting all this inbound about this product that wasn't even created at the time. And that, we clued in and we said, okay, let's get our teams working on this. We need to stand this up. Within a few, I would say, months, we were ready essentially to launch the wait list. And we did. And we announced that the longer Series B. And the response has been amazing. The product is almost ready. It's going to hit Ontario before it hits the rest of Canada and the US. But we're really, really excited about that. Because again, it just allows Bitcoiners to use their wealth to do something that is, in our view, really cool. If you believe in high quality assets, especially assets that you can live in, which is a very unique thing about a property, right? Yeah. And so if you can really, there's a few things that I would even consider using my stack for, and I think buying a house is probably one of those, and I think you could tell the excitement, given the responses. So we're really pumped to kind of drive that in and allow people to, because this will be great for Bitcoiners at first, but we got so much interest from people that have their houses fully paid off and they want to go the opposite way and say, oh, I want to use some of my house to buy some Bitcoin. I'd love to do it through you guys. And we just think there's endless potential in this product. And so that's why we're so pumped.
I heard you on with Preston, and I loved a comment he had. He said, Ledn is the fiat speculative attack company. And I was like, yeah, that basically is what they do professionally. The other thing with the mortgage product, which we'll ask more questions about later, but it is a testament to the fact that simplicity matters and all in one place is a big deal for consumers. Like, sure, could you execute this by doing 4 different steps and interacting with a bunch of bullshit intermediaries you don't want to deal with? You could, or you could just go to Ledn and they could do it for you in a much more transparent, clear-cut efficient way.
And you're not taking the kind of execution risk, which is, you have to market sell your Bitcoin, and then you're sitting in fiat, and then Bitcoin, something happens and it goes up 20% or down 20%. I mean, I guess down would be good for you, but basically you're not having to take any more risk in the interim while you're trying to get this loan, which is phenomenal.
And there's interesting tax implications when you're going, when you're having to say sell your Bitcoin to buy something else, because then at that point you may trigger a taxable event, whereas through a loan, most often you don't trigger a taxable event.
Good point.
And so it does that especially amongst the people that have Bitcoin that they were smart enough to buy at a really early point. There's a lot of tax planning that goes into the process, and I think that's where the loan is pretty unique and interesting, and allows for a very interesting tool to diversify. And going back to the comment you made about the speculative attack company, which I think it's an amazing tagline. So in Venezuela, I've said this many times, that I think it's just it's interesting. I given I've never had this chat with you guys. So in my lifetime, I've seen my home country's currency remove 14 zeros from itself.
Wow.
14 zeros. It's changed name 3 times. And so going back to this idea of speculative attack, basically when you're trying to make your fiat and put makeup on your fiat system to make it look like it's not cracking, you start creating these gaps, these inefficiencies. And so that gets reflected oftentimes in, say, for instance, let's just say, for example, that inflation runs really, really high and banks have to raise their interest rates tremendously, right? They have to go to 20, 30%. I'm just talking hyperinflation, like what happened in Venezuela, right? Like inflation rates go through the roof. Central bank can't even publish them because they're so bad. So the central bank just goes into hiatus. Literally, this happened in Venezuela. It just went dark for a year. And so the banks, the commercial banks, the private money, the little that there is okay. No, we have to reprice this money. Like we have to, our loans can't be going out at 5% anymore. We have to reprice these things to 40, 30%. And so that obviously chokes the economy, that creates a huge shock into the economy. And the government starts saying, whoa, Mr. Banker, you can't just choke my economy. And the banker will say, well, yeah, but this is our capital. Like clearly we're bleeding here. We're not even making ends meet. But the government will be like, well, but that doesn't make me look good. And so, and they'll say, well, what do you want me to do? And they say, well, let me just give you some of this 0% new fiat, so that you can lend it out at a lower rate to some specific sectors of the economy that are of national importance, right? So, i.e., farming, or i.e., medicine, or i.e., infrastructure, or you call it. Right. And what many times happens is these guys, will go into these projects because they know they can get 20%, I would say bolívares, when the running rate of inflation is, call it 200%. So they'll just go and they'll do whatever they can to get the financing. The project doesn't even matter. Like they'll just get it. They'll turn it into, dollars. Back then they would turn it into dollars. And it was just, you become a professional speculative attacker of the currency rather than a producer of anything. It is way more profitable to attack these inefficiencies than it is to actually produce things. And so what happens is you get this entire nation of financial arbitrageurs that try to basically exploit the gaps that you leave because of your crappy policy. And this is kind of what happened in Venezuela.
That makes a ton of sense. Like that explains a lot of the reason of the just inefficiencies in general that you see. Like people are obviously looking for opportunities for easy, quick money, and arbitraging is that easy opportunity. And when people see that opportunity, they seize it and makes them completely ineffective at whatever thing it is that they do productively in the economy. I mean, used car prices, I think you talked to Preston about that too, but it's one of those weird inefficiencies that we're seeing today in our market, which is my used car is worth more than a new car. And sometimes it's insane.
And people think they're fucking geniuses.
Yeah. This is something we've never seen in the US.
When you get into these environments, this is the tricky. So we're not necessarily fear mongering here to say that we're hyperinflating. However, we did have Larry Lepard on a couple months ago, and we both puckered in our seats when he started talking about where he sees this maybe going. But the point is, even if you move from moderate to significant feel it type inflation, which is happening in the United States and Canada right now, the math indicates will continue to happen. Well, you get into an environment where emotional, impulsive, gambling-like behavior becomes much more prevalent, and understandably so, because short-term behavior is rewarded. Sitting on your hands does you absolutely nothing. And what makes it even more confusing is no one knows what the fuck's going on. So this is honestly part of the reason you are an unbelievable resource and incredibly fascinating to talk to, because you have lived through this. You've seen this transpire, and this is segue to question here is, what similarities are you seeing in the United States right now that you've witnessed multiple times before in Venezuela when currency has started to debase and lose value?
So, oh man, so much to pull on there, because I just went through an experience of trying to buy a car in Canada, and I got immediately transported to Venezuela again, and I keep running into these
Venezuelan teleport, man. Car dealerships.
My dad says something hilarious, which now I think it's really even funnier. Now he says, "I come from the future," and let me tell you, he starts the conversation like, "I come from the future," and that's how he opens up.
We gotta have him on, Josh.
Yeah, we do.
Oh man, he was a Bitcoiner before I was, by the way. Full credit to my dad.
That's a future episode.
How many Venezuelans are just like phenomenally wealthy right now because they saw this coming, and we're like, "Hey, this Bitcoin thing sounds great."
Well, there's not as many of those, like accidentally rich. I bought it. Like I think the accidentally rich Bitcoiner is probably more distributed around the people that wanted to kind of knew what Silk Road was about, and they kind of dabbled in, and then they just forgot about it, or got there but didn't really do anything. And I think you get a lot of those, but less so in LATAM, because in LATAM you literally get thrown into Bitcoin because of very different reasons. You get thrown into Bitcoin because of hyperinflation. You need to teleport your money out, and that quickly means a quick transaction. The hook is, many people were in hyperinflating environment. They were like, you need dollars. Dollars became illegal in Venezuela, and there was no way for you to digitally hold them in a bank. And the physical bills were a big liability, because you could get kind of stopped, pulled over, and kind of got felt up and get your bills taken away if you didn't have a receipt from daddy government for them. And what happened was people got, they're like, okay, what can I buy? Well, there's no dollars. And then then they went into non-perishable. So people started buying things like tires, rice, beans. And then the government says you're hoarding. And then they start putting controls on the amounts of these types of non-perishables that you can even store or buy. And then people say, okay, well, what is it? And then they say, well, I have this thing called Bitcoin that I can sell you. And you can sell it for these things called stablecoins. Or back then, there weren't even stablecoins. So you can sell it in a P2P market. Or you can send it to somebody to sell it for you if you have a relative overseas. And people were like, well, okay, like that's quasi dollars. So they started buying Bitcoin. And they said, okay, I have some Bitcoin. I'm going to go now and look to sell it. And around that time, in the moment, sometimes the selling process would take a few days. And then they would log back in, and then they would say, okay, I'm about to sell this, but wait a second. This thing is worth more dollars than what I paid. And they had never seen that before. I know that sounds trivial to a person in North America, because you've seen stocks, you've seen real estate go higher in price. But to somebody in LATAM, like an extra dollar by like not just waking up one day. And this was the sort of whoa moment. And then they were like, okay, great. Now what can I do with this? And they're like, well, no, you can send it anywhere you want. Like the US, yeah. And I don't have to ask the bank for permission to do this. They're like, no. To put it in perspective, so my family is Venezuelan, and we, as many Venezuelans did, we had to open bank accounts in other countries so that we could, protect our dollars and use it to pay for things, because Venezuelan banks didn't do dollars anymore. And one such account my family had, or my dad had, in Panama. And one time we were trying to pay for surgery I'm not going to rat out the clinic, but it was a big clinic in the U.S. and to pay for someone to a relative surgery. And it took us I believe it was 7 days to process the wire. We had to send the reason why, like the actual letter stating that the surgery was real. And this is just to pay for a medical procedure. And so the fact that somebody tells you can send this and you don't have to, nobody's going to ask you questions. You can actually send it to your relative and you don't have to no one's going to call you up to confirm whether you really want to send this or return it because you didn't do something. And I thought that was really empowering. And then that's really why a lot of Bitcoiners got into Bitcoin in Venezuela. And for that reason, there wasn't a lot to forget about, right? And become accidentally rich with. They had to really tightly manage it and grow their stack. And in fact, the loan product is incredibly appealing to them because they can use the little Bitcoin they have, because our loan starts at $500, which I think is something that made it very different than others and really added to this idea that the product had to be inclusive. And we see loans go out for all sorts of things in LATAM, like buying medicine, paying for trips, paying for education, paying for your kids' Christmas gifts, etc. Credit. Less so in here. You buy a house, you buy a car, you pay down lower cost debt. It's a bit different. The use cases down there, it's a bit more, I would say, broad. And but yeah. Anyway,
the beauty for the average Venezuelan, at least the financially literate Venezuelan, is that correct me if I'm wrong here, but I'm sure you'd agree, they have a set of experiences that probably accelerate their ability to see this. Like we were on Pomp's show last week, and one of the things we said is, like, as we try to orange pill the average fireman, like it takes, as it did for us, numerous pecks on the head. And there's a little more force behind that peck, when you've seen these sorts of currency issues. I'm guessing you've had experiences where it's clicked for your family, your peers, and those that have gone through these sorts of circumstances.
100%, and it does, and you start seeing things very differently. But crazy as it may sound, even though Venezuelans have been literally pummeled by inflation, if you go down to Venezuela and you poll 10 people on the street, 8 of them won't be able to answer what inflation is. I would say 9, because you're at our education. I say our because we try our best to drive this point home, and largely the people that get to Bitcoin understand. I often say to people, if you understand inflation, I don't have to explain Bitcoin to you.
Yeah.
Right.
If I have to explain Bitcoin to you, you probably don't really understand what inflation is, because anyone that understands inflation, it's something that you turn on that you can almost never turn off, because you're always thinking about, okay, where's the monetary base at? Where's my asset base at? How am I relative to the monetary base? Like what are the changing conditions that may accelerate my inflation or reduce my inflation? How does that impact my cost of borrowing? So it's almost like you're, at least for me, it's been this way. And I come from a very entrepreneurial family, but crazy as it may sound, there's an entire propaganda machine. And I say propaganda machine because I can show you the propaganda clip. If you give me 2 seconds, I'll look it up for you. The inflationary, anti-inflationary propaganda that the government puts out that says, oh, inflation's not the government's fault. It's not because we printed X amount.
It's those evil corporations, right?
It's this evil, because prices of things start going up, and then you're like, let's probe turkey prices. Let's probe beef prices. Let's probe this. What are these greedy farmers trying to do now? And then you say, but this is a sequence. Going back to your point, coming from the future, the sequence is investigatory probe, because you have to show the people that you're doing something. Okay.
Yeah.
Investigatory probe turns to, conversation with industry peers. Peers come back. They say, we can't do this. We can't do this. We'll need a subsidy, or we'll need this. It's like, okay, first here comes a subsidy. And then what happens is you misprice the protein relative to other things because it's subsidized. And so subsidies lead to overconsumption. And then the subsidy gap becomes bigger and bigger and bigger for the government. And eventually, because they don't want to cause more inflation on the other side, they say, well, okay, but they know they don't want to do this. But eventually this leads to rationing. And it says, okay, well, you can only buy so much of the subsidized good. And then that just means that all of the goods that good can be replaced with disappear. everything starts disappearing because everybody starts thinking, okay, what's going to get regulated next? What's going to get off the shelf next?
That's something that many people, I think, don't realize. The United States hasn't dealt with this much, luckily, for people that live here. But back in the 70s, they rationed oil, or they capped the amount of what the cost of oil was. And what that inevitably did, there was an oil shortage, and there were cars lined up and running out of gas at gas stations. I mean, that happened in this country in the 70s.
Probably going to happen again.
That is exactly why it happened, because they rationed it, or they price fixed it. And when you price fix something, there's no longer any rationale for somebody to want to produce it because they can't make any money. So like, this is all about incentives. Just like Bitcoin, everything in this world is about the incentive structure. And I know I've said this before, but I'll say it again. Charlie Munger, one of the greatest quotes from him is, "You show me the incentives and I'll show you the outcome."
Mario, I want to skip over to you here. You got an interesting background, man. I'm excited to get into it.
It's pretty different than Mauricio's.
Yeah, you. I know you host Unhashed. We're big fans. You've spent time, and you were thinking you were going into education in South Korea. You've spent time at Blockstream. There's a lot to unpack. Give us your background, what brought you to Ledn, and if you got any fresh takes on some of the topics we've been ripping on here.
Yeah, I mean, I don't have too much to add to Mauricio's take on inflation, because I have been fortunate enough not to see it that close. But yeah, I mean, you summarized it pretty well. Yeah, I've got the humanities background. I never really had much of an interest in finance or business or tech or anything, except like from a distance. And I went off to South Korea to teach English for a while, and just kind of on a whim had some guy at a bar introduce the idea of Bitcoin to me, and I was like, yeah, that's kind of cool, and forgot about it for about a year, and then stumbled into the Seoul Bitcoin meetup, which is run by a great group of guys. Shout out to Ruben Thompson; he's one of the co-hosts out there. And so I got very I got introduced from the kind of technical angle. I just thought it was super interesting learning about how UTXOs worked and why SegWit was important and all that stuff. It's been fascinating actually, like joining Ledn and like getting to interact with a lot of my colleagues, who have come to this world from a place of necessity, and it's been really interesting seeing it from the other angle. But I do it really helps me realize all this kind of banking privilege I've had that I've just totally taken for granted.
Totally.
I was thinking of this question before when you were talking about how about all these rich Venezuelans down there, and the one thing that came to mind for me was kind of two things came to mind. One was that I was fortunate enough that early on, I was using Bitcoin actually in a practical sense, and that I like doing my own remittances from Korea when I was sending money home. And I thought it was cool that I didn't have to go down to a bank and do the wire thing. I could do it myself manually. And it was actually a bit more of a pain in the ass because going through all these steps. I was actually sending it through Quadriga at the time, which luckily,
we know the story there.
Luckily, I wasn't leaving coins on there, but that wasn't from a place of necessity. That was from a place of, oh, cool, I can do this on my own. And a lot of my interest in it was also again savings technology. But I'm also kind of reminded of over the last especially pre-block size wars, there wasn't as much of an emphasis on Bitcoin as savings technology, store of value. That narrative was there, but it wasn't as prominent. There was a lot more kind of a focus on kind of direct usage, again, the Silk Road thing, or sending international payments and stuff. And again, that stuff was easier when we didn't realize we had these constraints regarding fees. But I mean, that's just a bit of where I come from. And so I just, did the meetup for a while and self-studied, learned some coding cryptography, and ended up getting introduced to some of the guys at Blockstream and joined doing customer support for a while. And eventually, COINKITE brought me together with the Ledn team. When I was visiting Toronto, I was invited to one of these steak dinners put on by NVK, and ended up chatting with Adam and Mao, and I was really primed to be excited about Ledn, because I remember thinking at the time there was this interesting dynamic going on where Bitcoin has this, there was this not your keys, not your coins mantra, Quadriga just happened, so especially in Canada, this was really emphasized, and the whole self-sovereignty thing is such an important part of the Bitcoin ethos. And almost everybody who really, really gets Bitcoin will then go into building exclusively kind of non-custodial tools. And I remember thinking at the time that there's probably underrated services that are going to emerge soon that will kind of leverage the take advantage of just the fact that there's there are some services that people are going to want that are not going to be, fully self-sovereign in nature. And I thought that was like an underrated space that I wanted to keep an eye on. And so when I met Adam and Mauricio and they started talking about Ledn, right away I was like, oh, this is one of those things I've been looking for. And like, and I kind of, and I really got the sense that, these guys weren't out to build the next, shitcoin casino, if you will. It's like, there's like a real genuine like desire to provide a service here. And so I was hooked early on. I was a very enthusiastic early client and joined the team about a year ago.
Very cool. There's one thread I want to pull on from something you just said, which is we've only been in since 2017. So we have lived most of our Bitcoin lives with the inflation hedge narrative kind of ruling, like the gold 2.0 narrative. But if you go back really more the censorship resistant self-sovereignty angle, here's where I'm going with this, massively generalizing. Let's say we start with the spirit of self-sovereignty. We kind of move into inflation hedge because that's exactly what it accomplishes. But it feels like, especially with you folks being up in Canada, and have we talking to a lot of Canadian Bitcoiners. We've had,
I think, more than the United States, man.
Valis, Foss on twice. We've had NVK on twice. We've had Sessions on, you guys. We've had kind of a billboard up there in Canada recently that's displayed the importance of the origins of this protocol, the self-sovereignty, censorship resistant. You boys kind of feeling that we're flipping back and that the inflation billboard is still blinking, but now we have this other billboard that's also flashing brighter than it has before for more mainstream folks and people that haven't been paying attention to that characteristic of Bitcoin?
So this is a great question. And I think there's so much to unpack there, but I think what I'll try to sum it up as is Bitcoin is a multi-featured asset. It has so much more than one good attribute or characteristic. It is a censorship-resistant, self-sovereign asset that it can be done in in which you could have complete self-custody. It is completely transparent and verifiable. It has a finite supply. It shines in different circumstances. For each attribute will shine in a different circumstance for different reasons. So, for example, in the context of what's happening in Ukraine, it's the self-sovereign resistance assets. In the context of what MicroStrategies is doing, it is a great asset for reserving and protecting yourself against inflation, right? In the context of, say, what we do at Ledn for proof of reserves, it's an asset that allows itself to be verified 24/7 on the blockchain, and you can very easily look at balances and confirm that things are or aren't not where they should be. In different times, for example, so when Quadriga occurred, it was the transparency and the auditability of Bitcoin that shone. And it was like, okay, well, what about the great custodians? How are we doing custody? How are we regulating custody? How are we talking about custody? And that struck out a huge conversation. And now, oh my God, this is a great asset that can be stored very safely. And so, along come and then there's a proliferation of custodians. And I think so each time you see each thread, and mind you, some threads or attributes are more, palatable or prone to be regulated than others. And so it's each one of these will have camps of fans and camps of people that perhaps are not that some people will see these things as assets. Some people might see these things as these things are a challenge to overcome. But again, at the end of the day, they provide a very tangible benefit to people all over the world. And I think that's what makes it so special.
Yeah, just to add on to that, it reminds me of the parable, like with the blind men, each touching a different part of an elephant and describing, what an elephant is like. It kind of reminds me of that. Like, there's so many different aspects of it. I want to give a shout out to this. I've dropped in our chat, like if you can post in show notes or something. That there's an article written by Nick Carter and Hasu, where they tracked kind of the various Bitcoin narratives and how much share they had over time. So if you look, like they came up with this really, really cool chart that just kind of shows the kind of ebbing and flowing of the different narratives. And yeah, like it's just, it isn't any one thing. And sure, depending on the different environment, different kind of beneficial properties of Bitcoin are going to come to the forefront. Right now, like inflation is, like the thing that's on everyone's minds. And although actually, I think that's changed a lot with what's going on in Ukraine right now. Like, there's been something like $100 million worth of humanitarian aid sent by cryptocurrency networks, and like a huge bulk of that in Bitcoin. It's been a lifeline for individuals, who are now, stuck behind Russian sanctions and like need to be able to get money in and out. I have actually a friend of mine like had been sending me all sorts of like really interesting DMs that I tweeted the other day about like how it's just, suddenly like he's got friends over there who are really, really interested in like hardware wallets, and not just as a curiosity, but again, out of necessity. And yeah, who knows, like 2 years from now, we might be talking about a completely different aspect of Bitcoin just because it can serve some other purpose. Hopefully the next one is a bit more of an uplifting scenario than either of those two. But I mean, we can't expect these things are going to be constantly flowing.
Yeah, Bitcoin is a great teacher, and something when you stumble into it, you usually have some kind of an angle that you're interested in, and you walk down the rabbit hole there, but then you also ancillarily walk into these other aspects that it has, and it is incredibly deep. And it's something I don't think anyone's really ever reached the bottom of this rabbit hole yet. Certainly not myself. I want to talk about some of the products that you guys have done here. So the real estate one is something I think is going to be really, really interesting to people. I'm hoping you guys could maybe flesh that out for us and tell us exactly how that works. And maybe we'll ask a couple of questions about it.
Yeah, for sure. So the product, it's right now, it has not hit the market. Just to be clear, it will. We are expecting it to hit the market in Ontario pretty soon, and again, quick follow in the US, and that should all happen. Hopefully within this year, before the end of the year. So the way the product's structured today is it allows you to post 100% of the value of the property that you want to buy in Bitcoin. So let's just say, for argument's sake, you want to buy $1 million house. You would have to then post $1 million worth of Bitcoin collateral, and a sort of a lien or a mortgage on the property for the property that's worth $1 million. And so you would have $1 million worth of Bitcoin, $1 million worth of property, and we would then advance the funds to purchase the house. So basically, it's $1 million loan, and you're placing $1 million worth of Bitcoin and $1 million worth of property as collateral. To us, it's still 50% loan to value. We still have 2 times the amount of money that is being lent out to the client. And we have a much more stable pool of collateral in that, real estate prices are not as volatile as Bitcoin. So that provides quite a few benefits to the loan, which is that one, it allows us to give more generous timelines for clients to post collateral if the price of Bitcoin comes down to the south side and they need to top up, which is, we cannot do that in the standard Bitcoin backed loan offering. There's an immediate liquidation threshold, where in the Bitcoin mortgage, when the threshold is reached and the price drops enough, the client has 2 weeks essentially to top up the Bitcoin before action has to be taken on the Bitcoin. What we heard from our clients was that was really important for them because they wanted to be able to have enough time. Many of these clients have some of their extra Bitcoin in some geo-distributed facilities that are very hard to get to, and they need some time to kind of go and get it. And so we wanted to. Our job really is to create an offering that solves a problem for you.
So the people who would benefit most from this are some, say, people that are, fairly wealthy in Bitcoin terms, but they don't want to sell because they don't want to incur that massive tax implication that selling would incur on their part. And they maybe don't qualify for $1 million loan outside of, their income stream. So they could still get themselves this $1 million house if that's what they want. And yeah, that sounds like an awesome product. And it's definitely something people are looking for in this market.
I think what you just did there, Josh, is important. And let's keep doing that in this conversation, because if someone's listening and they're confused and they're not putting the pieces together, I think us bringing it back and saying, hey, what kind of person is using this product is important to make this digestible. And this really is the Bitcoin Cash, the Bitcoin rich.
Whoa. Did you say
cash
Bitcoin
terms.
Cash?
Yeah, whoa, that was a Freudian slip.
Oh,
kick me out, dude. Just boot me from the meeting.
Done.
This is the Bitcoin rich, relatively cash poor individual that wants access to a home.
Very different than a Bitcoin Cash person.
That is very true. Both of those are correct. But no, that is very true. Basically, this product, the main client, the main persona for this product was precisely, a lot of our clients who are, to your point, they become pretty Bitcoin wealthy. Because of that, they don't necessarily, the bank really, when the bank looks at you for a mortgage. So this is an interesting point. I think I've touched on this in some other conversations, but I'll touch on it again, is a lot of people mistakenly think that a mortgage is a loan against your house and your income is just this thing that's there. It's actually not. The way the banks look at it is the mortgage is as a loan against your income. And it has your house as the ultimate collateral.
Right.
But what really qualifies you to buy the house is those monthly cash flows. It's not the value of the house, right? If it was the value of the house, all of us could show up and say, I want that $5 million mansion. And be like, okay, 5% down. And that's not what happens.
Well, this is the beauty for you as the lender in this scenario, because now you're actually, you have your fingers on the real honeypot. Like, it's income obviously matters, but in your mind, the Bitcoin is the bigger deal, and that's either present or not.
Yeah, to be honest with you, like I would say no lender wants to ever think of a scenario where they have to take out the loan or close out the loan, because that just makes for shitty client experience, to be honest.
Right.
But the truth is, here's one to kind of correct that narrative. If someone's thinking that, you have to be totally transparent and fair on both sides, because for your other set of clients that are seeking yield, they need these assurances. You know what I mean? So I understand, and I appreciate you saying that, and we understand that nobody in your shoes ever wants to liquidate someone. But if you're not willing to liquidate someone, well, then the rest of your product's horseshit. You know what I mean? So it is like there's a yin and a yang there.
The distinction, I think, is between being willing to, as like a risk management process, versus like looking at it as something that we've gotten as ours. It's just, it allows us to kind of reduce the risk on our end, which just allows us to improve cost of capital.
Yeah, and you make a very good point. Like this is exactly what. Because listen, we do have to liquidate at times some of our Bitcoin-backed loans when the prices move, and a lot of our clients, they didn't plan accordingly, or not a lot. I would say a very small subset, and I would say increasingly less so, which I'm very proud of, because it shows us that our clients are getting more educated. So every time we have one of these events, it's on a relative basis, it's less and less of the people that seem to get affected. But we do have to mention that and reference that when we say, it's a challenging part of the business, because you have to manage the relationships with both the borrowers and the lenders, and you have to protect the lenders, and you also have to do your best to protect the borrowers, right? But there is the unfortunate instances where either the borrower overstretched themselves, or they didn't have enough Bitcoin to kind of top it up. We've had the case where some clients say, listen, I think this is going lower. I don't want to top this up because I think this is going to get stopped out again at a lower price. So I'm just going to let it get closed out. Don't worry, do what you got to do. And that's happened to us too. And so, but it's really about being very clear about that point. Having the ability and being able to liquidate is what allows us to raise capital at lower and lower costs, and allow more and more people to be able to finance their Bitcoin, to do more with it, and keep getting it into more and more hands, because we're making it, in our view, more and more useful. And so it's a reality of our business, this ability to liquidate, and we do our best to be very upfront with our clients, so that they know what they're walking into and they can plan accordingly, and nothing catches them by surprise.
Mags asked us a question specifically about liquidations, how they work. Give our audience just an understanding of what it looks like if you're entering one of these agreements with you. And like you said, there's a balance here. I actually thought about this before we started talking, because there is a subset of people that they want, the answer that they want is that it's mathematical, it's clear, it's definitive. If you don't meet this expectation, you get liquidated. And that's how you can trust us with your Bitcoin. And then the other side flips to, as we've discussed, there should be at least some kind of understanding and buffer and warning, which you've already alluded to. Walk us through this process for someone that actually signs up for one of these agreements.
I'll say, before we answer, do you guys know Mags?
Yeah, we do.
Oh, yeah. Okay. I was going to say fellow firefighters. So if you hadn't,
firefighters in this space are growing exponentially. We're going parabolic.
That's awesome. So I guess I'll start the question is, everything is mathematical and systematic. Like there, as a lender, you can't give yourself the I'm going to wait and see if the price bounces, or I have a crystal ball. You don't know where the price is going, and your risk parameters are all basically set such that you can protect the capital, right? That is your North Star as a lender, is to protect the capital. If you don't protect your lender's capital, then you don't have a business. And so it is the ultimate name of the game. And one of the big stats that lenders look at, especially as you get further and further up the ladder of lenders, is what is your loan loss ratio? Do you have the ability to liquidate? What is your underwriting process like? How much money are you losing, basically, relative to what you're lending?
Yep.
And at Ledn, the answer to that is zero today, because all of our loans are systematic and they get closed off before they ever reach those thresholds. And that's what allows us to keep growing the way we have. Like transparently, the space has been flourishing because we have some other quality operators that are also doing a really good job. So the way the liquidation works at Ledn is, if you have a standard Bitcoin backed loan, our loans are issued at 50% loan to value. So if you want to borrow $1,000, you have to post $2,000 worth of Bitcoin at the start of the loan. That is, 2 to 1, so 50% loan to value. As the price of Bitcoin goes lower, your LTV ratio goes higher, because the LTV is what you've borrowed by the value of the collateral. So as the price of the denominator goes lower, your LTV becomes higher. So the loans start at 50% LTV. When they reach 70% LTV, which equates to about a 30% drop from the price at which you got the Bitcoin, then you would get the first courtesy notification from the system to say, hey, you've reached the 70% threshold. You need to top up your loan to get it below 70%, because once it reaches 80%, it gets automatically closed. That's the first email that you get. At 75% LTV, which means the price dropped a little more, you get another courtesy email from the system. And then when the LTV reaches 80%, the loan has to be automatically closed off. And when that happens, we do obviously a market sell order and sell only the amount of Bitcoin needed to close out the outstanding debt. And then the balance gets sent back to your savings account. And then you can withdraw it at any time. But that's basically in the unfortunate event you can't top it up.
The question I have for you then is, because these price swings, when they happen, they can happen really quickly. So is there a time window that I have? Like, give me a day. Like, is there? I guess what I'm saying is, if I have a loan with you guys and I'm getting that email at 75%, I'm at work, I'm busy. Like, my sphincter is getting really tight, because I know I'm in a position where, like, 5 minutes from now it might happen. Like, how do I?
And this is where you have to manage the relationships with the borrowers so well, and try to prevent you from getting to that position in the first place. Because what the reality is that nobody has a crystal ball to know if the bounce is going to be short-lived, or if we're going to stay down there and head lower. If that were the case, then you can't really just, everybody would be a millionaire just by looking at the charts, right? So the reality is that nobody has a crystal ball. And what I would actually counter that with saying that if you're being told that, oh, hey, this doesn't matter, or hey, oh, hey, yeah, we'll give you an extra 48 hours.
That's a problem.
That is actually, I would say, a big red flag, because what happens if it doesn't?
100%.
Right?
Yeah. I get it. I understand.
The business can be decapitalized. And all of us want Bitcoin to succeed, but we have responsibilities to some of our investors, our lenders, and to the USDC accounts, everybody that we have to protect. And those are the rules that we set, right? Yeah. And what we want you to be is very clear with those rules, because we can't change them. It's rules that we're bound by,
right? And
so as long as we're all playing by them and are clear with them, we should be okay, right? Like at Ledn, it takes you, I think it's 2 clicks, tops 3 clicks to top up your loan from your savings account, and from your savings to your loan, it happens immediately.
I have a couple things I want to say on this end. First of all, from this microphone, the more cold-blooded and reptilian you sound, the more interested I get in using your products, right? Because so it just depends on which side you're coming at it from.
It totally depends.
The other thing is that, like, because to elaborate on that, like, that is how Bitcoin is, man. Like, I'm not wishing harm on people, but this is algorithmic, cryptographic, mathematical money, man. There's no fucking around here. And so there is some survival of the fittest. If you're putting your entire stack and you've got nothing to top off, that's a mistake.
Yeah, you're
You
fucking
know what I
up.
mean? You fucked up.
That's a planning error.
That's a planning error. That's on you. If you enter this agreement with an understanding of how volatility works and sufficient liquidity, this can be a good product for you. If you don't, you could get screwed. Such is life. This is how markets work. And Bitcoin is, in some ways, the truest, most ruthless of markets. So
True.
in some sense, we should expect that lenders are going to be the truest and most ruthless of lenders. I know that may not be the brand you're looking for, but there is truth to that.
You guys offer, you can, so what, if I go on Ledn to take a loan from you guys and I want to do this, you guys can allow me to take, to pick what percentage of lending, like how funded I want this thing to be. Like if I want to have a 200% loan ratio or 300%, can I choose that myself because I would feel much more comfortable that way.
Yeah, I mean, our loans are fixed in that we offer 50% loan to value. But the thing is, you're always able to add more collateral once the loan is opened if you like. So like we're not gonna be like, oh, sorry, you've oversecured your loan. We don't like that. No, by all means, like go for it. And then like there's also because as Mauricio pointed out, it's so fast and easy to transfer from like your savings to your loans. What people will often do is if they want to over collateralize, sure they can directly add some collateral. They could also just add some to our BTC savings and earn interest on it and have that ready to switch over immediately. But there's no we don't say sorry, that's too much collateral.
Gotcha.
But when you first open your loan with the current versions of the product, it is 50% loan to value.
Mario, I have a question for you here because I know I read your Bitcoin Magazine article on proof of reserves. Talk to us about what proof of reserves is, in what manner that's being used at Ledn, and then that parlays into another subject of like what in your guys' mind makes you unique in this landscape.
Yeah, 100%. I mean, it's great because those are several questions with the same answer. Essentially, proof of reserves is one of the things that really makes us stand out. The basic idea here is you can at a high level you can think of proof of reserves as an attempt to bring. It's a method for bringing Bitcoin's high transparency and auditability into the business space. There's a very simple observation that's been kicking around a long time in the Bitcoin space, which is, we have these UTXOs, these, on-chain transactions that you can point to and prove that you own, you are in possession of a certain amount of Bitcoin. And there was also this problem, especially, in early days in the industry, you had a lot of businesses that weren't properly run or had been hacked or didn't have the reserves they claimed they did just because it was an emerging industry. And there was, this observation that actually it would be trivial. Like, I mean, maybe I shouldn't say trivial, but like, it's much more doable than with the legacy financial industry to be able to just prove that you have the reserves that you claim that you have. And this idea had been like floating around for like quite some time. I mean, Kraken, I believe, did some version of proof of reserves back in 2014, and then there was kind of silence for a long time. And there were a few people talking about it. Nick Carter, I think, is probably has done the most, considering his reach and how much he's been banging that drum. But Mauricio published his own article a couple years back. There were a couple other names in the space, and saying kind of, this is something that why aren't we doing more of this? Why aren't clients demanding this? And yeah, so Ledn, I still remember this because it was just before I joined the team. And so I was a very, very happy client when I saw this. Ledn did the first proof of reserves for any lender in the cryptocurrency industry. This was just over a year ago, would have been January 2021. And that was a pretty significant breakthrough in that in that the kind of original, very purist idea of proof of reserves, which is how I thought of it, was you have your UTXOs, and you point to them. You can publish a signature that shows that you're in possession of them. And due to the nature of our product, like coins are lent out. That's how we generate interest on our savings. And so what Ledn has done is we partner with Armanino LLP, and we anonymize our data. We open our books to them, and they go through and tally up all the assets and liabilities. They see what reserves we have, what's owed to us by, let's say, our partner Genesis. And what they do is they'll produce a Merkle tree. It's this data structure where it becomes trivially easy to prove that a certain amount of data is within a larger set. And what Ledn clients can do is you get a unique hash ID, just anonymous little ID, and you go to the Armanino Trust Explorer and you put that in there. And it'll say, there's an account that matches this, this ID that as of, this date has had, this much, Bitcoin and USDC attested to it. And so, yeah, what this does is it allows people to realize that, hey, we are operating as we say we are. There's no funny business going on behind the scenes. We're not, using clients, funds, for any of our own purposes. We are operating, transparently. And like, this is the kind of thing that what really excites me about this is that, not only, so we have this kind of original idea, okay, you have Bitcoin on chain, you can prove it. Okay, now you can use the same principles in partnership with, a third party accounting firm like we're doing. And like what I really want to see is over the next 5-10 years, I want to see more of this happening. And luckily in the last year,
Agreed.
More companies have followed suit. So, we got Kraken doing it. BitMEX has done it. There are a few other ones listed in the article. So it's gathering steam a little bit. I would love to see this become an industry standard. And clients, like, frankly, they should demand it. Like, I don't know why you would use a service that holds your coins and they're not doing proof of reserves.
Completely agree. I mean, especially seeing you guys do it, like, if that box isn't checked, it's game over. You know what I mean?
The thing is that, again, I mean, just to say it and to give a huge kudos to our operational team, our treasury team, our lending desk, a proof of reserves attestation it requires an entire the effort and the buy-in and the collaboration of your entire organization, because you have to make sure your security team has to be involved to make sure that like no client data is being shared. Your treasury team has to be able to give all the balances at an up-to-date, like right on time. There has to be like really fluid communication because there's this precise point in time at which everything has to match. And so it's at Ledn, one of the things that makes us very well suited for this is our simplicity. Because we operate with, in our view, very high quality assets, and it's a very simple business. We have a very simple suite of products. And we have really great counterparties, and not that many of them, to be honest, because we are very careful in how we select them. And so that makes us uniquely positioned to do this. And when we are in the way that we do it, I think we're still the only lender that does it. And I think that that's a huge testament to the entire team, because people see proof of reserves, but it requires, it's a really big lift, and there's a reason that I wouldn't say there's several reasons why other companies haven't necessarily been able to jump and do it, because it's tricky.
Yeah, it's a real investment into transparency. Like one kind of funny anecdote that I realized when I was researching for that article was Gate.io was this exchange that did proof of reserves a couple of years ago. And it took them like half a year to publish it or something from the date, because they had something like 200 assets, which, like, kudos to them for actually going through and doing it. But like, yeah, that's another reason why like there's a real value in kind of simplicity and being, like, instead of producing like tons of products, just trying to capture all markets, like being like, what we're going to find, the products and the assets of people that are highest quality and just do them right.
Yeah, I don't think that there can be a large enough explanation point that can say how big of a difference this is from the traditional banking system to this new financial structure that we're forming now. Because if you go to Chase, Wells Fargo, or Citibank and you ask them for proof of reserves, like, they literally are fractionally reserved. Like, we're talking 10% of the assets. I mean, they're allowed to re-lend out 90% of the assets they have on hand. And without the FDIC and government backing, obviously they would have crumbled years ago with that kind of a loan to value ratio going on. Like, that is not something that you can perpetuate for a long period of time before you have a bank run and you completely collapse. But what we're talking about here is the complete counterpoint to that, which is 100% reserves that are provable from a blockchain, which can't be manipulated by anybody, with the highest standard, highest performing asset in history. Like, it's such an exclamation mark to diverge in these two different financial systems that are currently operating next to each other. It's pretty stunning.
And even if you're not 100% reserved, like, that's something we can get into. I don't know the exact dynamics, but the key word here is transparency. What I think of here is that if you're going to draw out legitimate Bitcoin hodlers with significant wealth that understand the significance and uniqueness of Bitcoin, you're going to have to play an ultra fair game, right? Because this altcoin land and this Bitcoin land, the way we're wound, polar opposite. And financial services companies built around Bitcoin are going to be held to higher standards than fiat predecessors because Bitcoin is the epitome of monetary transparency and accountability.
I wholeheartedly agree with your statement, and I do want it to just make it clear that we like being brutally honest with everybody. Like, there are risks in any lending business. It doesn't matter how much we can, test our, like, we lend money and we lend to counterparties and we can prove that they have them. But at the end of the day, there is some operational element. Even if we choose the best of the best counterparties, like, there is risk the same way there are risks in any other lending business. And any business that's telling you that there aren't risks in your lending operation, I would welcome you to check them, because I think, it's not an easy thing to lead with if you're trying to sell a lending business. But I think it's very important that everybody understands that we have an incredible team of professionals understanding all these risks and doing our absolute best to essentially mitigate them. And in our view, we do it better than anyone. But there are risks at the end of the day. And our accounts are not FDIC insured or CDIC insured because you can't print Bitcoin.
Those are meaningless in Bitcoin.
And I would argue that they're meaningless in the real world, because I come from a place that I've needed them. And trust me, you know how they get those 25K? They print it again. And when they do that, they devalue the value of the original 25K. So what you end is never, like, it's just a placebo type of insurance, at least in a hyperinflationary nuclear scenario like happened in Venezuela. And so this FDIC is more so that you can keep the trust in the banking system, right? Because if you didn't have it, to your point, it would be very hard to grab this trust. The same way it was very difficult for companies like Ledn at the early days to prove to people that we had the operational expertise to protect your Bitcoin when you lent it to us. Because don't forget, like, Bitcoiners are the most, in my view, out of the entire universe of, call it crypto if you want to call it, Bitcoiners are the shrewdest, the most discerning, the most sort of skeptical, the guys that do the most diligence. And when I got clients on the phone in the early days, they say, I want to talk to one of the founders, I was like, I'm so glad to be on the phone with you, because every single person that gets to this level of diligence somehow ends up choosing Ledn. So I'm really happy to be here on the phone with you today.
I thought you were going to say Dogecoin. I thought Dogecoin people would have been all of those points that you hit there, but what do I know?
All right, I got a question here, and this could be tough to answer, but I think it's an important thing to explore. So when I look at this financial services space, I'm seeing this competition for yield. Okay, so we're competing with Gemini and BlockFi and all these participants. And I'm not here to sling mud at any one company, because tip the hat to any entrepreneur that's got a product in the marketplace and people are buying it, as long as it's not malicious in intent. Okay, that's my disclaimer. But to back up, I'm not interested in who's giving the highest yield. I'm interested in who's giving me the yield in the most risk-free, honest, transparent manner. Is this a tough dynamic for you folks? Because it does feel like, researching and even talking to you, it's clear that you guys echo a true Bitcoin ethos, but yet you're in a marketplace with a number of yield-seeking, probably short-sighted organizations that are just trying to get the most appealing number up on the internet.
Not only the organizations, but the people buying these things are just looking at the number like, oh, they're offering me 10 basis points more, I'm going there.
What's this dynamic like to balance? And walk us through that.
So it's a fascinating question. So I think, listen, there's all sorts of, I think one of the biggest problems we had in this industry in general was the fact that, this is changing more so now, but by and large, you go to one of these yield ranking pages and you see every single name kind of splattered into a wall as if they're sort of indifferent and they're all just apples in a basket that you can choose from, and that they're all the same, right? And then you're just picking, oh, this one just gives me a little bit higher or a little bit this. And what ends up happening is that crypto risk is hard to discern, right? Like, once you spend enough time in this crypto space, you start being able to discern risk. And I would argue that a lot of people go through, and I'm not ashamed, like, I'll tell you, like, this happened to some of my journey as well. Like, you come into Bitcoin, you understand it, you start learning about these other technologies, you're like, oh, wow, this looks promising. And until you start seeing something, because you're learning, you come into crypto, you're curious, so you're going to be naturally curious about other things. Like I don't think a lot of people come into Bitcoin thinking, or crypto thinking, it's Bitcoin, it's the only thing, and then I don't think there's anything else. You come and you start exploring, and then you read, and you start reading one of the, you start following up with the people involved, and then some of them do some stuff, or you write something, or you write a proposal, or you read about history and something happened because some dude said something, and you're like, oh, that doesn't sound pretty cool, and you're like, maybe I should stick to this Bitcoin thing. But it's it's a bit of a journey. So I think once you are in Bitcoin for enough time, or in crypto for enough time, you start understanding that there's a lot of risk differences. Because once you start seeing a few things blow up in DeFi,
right,
or a few CeFi things blow up, you start saying, oh, whoa, how are these guys actually operating? And then you start becoming a little more diligent, and you start asking a little more questions. I
was just going to say, if you're just thinking about, like, people might look at USDC, maybe that's the best example of like a stable coin, but there's tons of risk built into just that one thing. You've got currency risk, which is the dollar itself. That's a risk. You've got protocol risk, which is that there wasn't a mistake made in the code that was actually surrounding this protocol. Then you've got centralization risk of whatever that thing's riding on top of, whether it is Ethereum or whether it's one of the other smaller protocols. There's risk there. There's pegging accuracy from the algorithm that actually has to try to keep that thing stable with the dollar. And if there's liquidity in that market for it to actually be able to maintain its peg. And then you've got regulatory risk on top of that, which is maybe the government's going to come out tomorrow and say that all of these things are illegal. Like, each one of those risks are layered on top of one another. And that is just talking about a stable coin. I mean, it's immense.
You introduce all the whole menu, and it gets even more fragile.
The thing that really gets me is when they report these like crazy high yields, like you find out it's paid in like some native DeFi token. And I'm just like, like, how do you not mention that? It's like,
So going back, I think just, to put up, to guide the conversation, I think in a way of where I think this is going. So I think this is exactly the problem that I think optimistic me thinks regulators are out to solve, right? Because what's happening is you're getting all sorts of platforms trying to dress themselves like Ledn and say, oh, hey, look, we're FDIC insured. I've seen some lenders claim FDIC insurance. And I'm like, how? Like, it's actually impossible. And so like there's a lot of misrepresentation in some parts of the industry. There are some providers that are operating under different rule sets. Like, we have to do full KYC and have a regulatory and compliance team. But there's somebody can spin up a protocol and do lending without asking anybody to identify themselves. And I think that those things are going to change. They just haven't had the time to properly get to what they really need to do. But I think that's coming. And I think what's going to happen is you're going to have these. Listen, people like to think or paint all regulation with a bad brush. I actually think it's the opposite. I think, if you look at the system today, and if you look up even oppressed countries like Venezuela, and you say, okay, where do the wealthy Venezuelans have their money? And the answer is the United States. And they have it at very regulated banks. With very regulated, asset managers. And that is the case with probably people in Ukraine and others. And so it's not that people run away from regulation. They run away from bad regulation, and regulation that holds you back and that makes you, and that sets you back. But I would argue that there's some regulation that allows some economies to flourish or some societies to flourish. And so I think regulation is going to do two things. It's going to allow the average person to be better able to say, oh, this is something that has more of a process built up to it. It's getting checked at by a few people that are outside external, i.e. the regulators. And That gives me a little bit of trust, which is what happens in the system today. And I think that, some people like to think, okay, this is crappy, but I actually think the opposite. I think this is going to open up Bitcoin to be usable to a lot more, because we're all here. And I would bet you that all of us here are like the trailblazers in our family, or the guys that all of our groups of friends look at to do all the bleeding edge thing. But eventually, for it to get palatable to all of them, it has to have all these checks and balances and safety guards and safety rails, right? That they like.
I think the cynic would say the thing about regulation, at least for where I sit or where we sit in the United States, is there's a lot of vested interests from the banking industry that obviously don't want to see this competition, moving its way in. And they've got a lot of money and a lot of ability to lobby for laws that will make this more difficult. And I think that's kind of the tit for tat thing that we're looking at right now. Because I think you're right. I think good regulation is obviously something I don't think you're going to find many people that are going to have a problem with, but it's going to be the lobbyists that are working for the banks that would rather not see this happen is going to be where we run into problems.
To be honest, I think the banks are they're starting to get dollar signs on their eyes with all of this.
Well, the game theory will work, hopefully.
They think in numbers. And I think they're starting to see the opportunity in this space. Like you look at Silvergate, look at Signature. Find me a regional bank in the U.S. that's growing faster than they are. And I think that we're having a lot of conversations with banks from all over the world, and they all want in. Like they all want to find a way, or they have a crypto division, or they've had a crypto briefing on their boards. The game has changed. And I think that, listen, banks and everybody wants to make money. The reason banks or anybody wouldn't make money is because they already have it too good. And stepping outside of their very regulated box could break this engine of literally printing money. So they're saying, we're not going to break this engine, this money printing engine, until we know for a fact that whatever we add to the engine is not going to break it. Right. So once we have full crystal clear, don't forget, these guys have it way too good. Like, what is their incentive to move faster, to get to the top? They're already the top.
Right.
So, they're not going to break it. And that's why it takes innovators like companies like Ledn that are willing to kind of blaze this and trailblaze it. And once we get to the other side, we'll either be fighting alongside with them and changing and making them act differently. Right. Because it's going to come a point where, these companies are growing too fast. And if you look back at sort of the innovator dilemma and the history of innovation, like if this thing continues the way it goes, just to put it in a different way, like ABC or NBC were never able to go digital, right? Like they were never able to beat Netflix. Like, the big airline agencies were never able to beat Expedia. They were never able to beat, any of the big natives, the digital natives. So it's very difficult for incumbents to become cool. It's like that meme, the "How do you do, fellow kids?"
Right.
Meme when you try to become
put the hat backwards.
And I think you're going to see some of that. There's going to be some of the old guys thinking, yeah, no, we're just going to get into this the same way GM thought they were going to get into electric cars, right? And they just got blown out by Tesla. And so I think it's inevitable.
Yeah, the thing that's fascinating, I'm trying to figure out how to articulate this, is like when I just having interacted with you guys here for an hour, you're moving into this paradigm shifting Bitcoin digital money future, but you're actually, it looks like, trying to position yourself to win by being the slowest moving and most conservative, because you have these two juxtaposed conflicting worlds in crypto, right? And we're speaking to an audience that if they sniff even the tiniest hint of impropriety, they're gone. You know what I mean? We're talking to an audience of people that were barking, cold store your Bitcoin deep on a cold card, set it, forget it. And so it's interesting to have you guys on, because it's almost like, first of all, I think all of us would admit this is not for everybody. We would say this right off the top. This product is not for everybody, but we're entering a new marketplace where to compete, you need to demonstrate to somebody that's thinking about taking 1/10 of their stack off deep cold storage on a cold card and bringing it out and getting some yield or buying a house. And they're going to need to feel completely safe and totally comfortable to do that.
Right.
We've talked about a lot of this. So this is sort of like a synthesis summary question. But if you guys were talking to that member of our audience, what would you say to try to convince them that you custodying this is something that they can trust? And then secondarily, I do have another question about a product that you guys are thinking about, or I've heard you're thinking about, where it stays on chain or people maintain keys. Maybe you can talk about that. But give that person sort of your TLDR summary on why you guys are unique and why you should be trusted.
Listen, I think it's hard to put it into a sort of 30-second elevator pitch that says, trust me, right? Like I think I would say to people, do your diligence. Do not trust, verify. We want to be diligent. Ask us questions. Ask our support team. We have a 1 hour response time. We'll get back to you no matter what. And if we can't answer your question via email and you really need to get on the phone with somebody, we'll do that. Like we'll set up a call with you and we'll explain to you how we do things. Because I think that's the only way you're going to gain trust. Come meet us if you're around. Like we're going to be in Miami. If you're down there, Mario's going to be in the booth. And we're going to have an amazing team down there. Come talk to us. Like meet us. I think there's too much of the abstraction of the people from this industry. And at the end of the day, you can put all the bells and whistles on your website, but it's going to be people that make that happen. And so go find out who's behind that. And I think you're going to come off with a pretty good impression. And I would also tell you, don't just diligence Ledn. Like compare us to others, because if you just look at us, you're not going to see how great we are. And so I welcome you to compare us. We welcome that. And if we're coming short on something, please do let us know, because we want to win at everything. And so we'll do our absolute best to do that. So that's, I think, what I would say. And then we can get into the other product. But Mario, I don't know if you have anything to add.
No, man, nailed it.
I think that is the whole point of proof of reserves, though. You have somewhere to go to verify.
Yeah,
you know what I mean? Like if you're not publishing data, like the people thinking about throwing money in a Bitcoin savings account are just taking people's word for it. You have to put you have to be transparent. You have to have, put things out that reflect that transparency.
100%. And so to your point, going back to the on-chain concept of having the key on-chain, that is something that we're not strangers to. So when we originally had our product, we had this model where we would have individual chain or an individual on-chain address for a client's loan. What ended up happening was, after we did a big survey of our clients, there was a point at which the industry bifurcated, and this is more on the cost of capital side, where when we were in the midst of the bear market, there was barely a market to finance Bitcoin-backed loans that were on-chain, because for that you needed to go to like really, really TradFi investors. Because anybody that was in the crypto space, i.e. the crypto brokers, so like the Genesis of the world and the big names in the space, they had all the liquidity, but you had to give the Bitcoin, and they didn't allow us to have this setup, right? And so what ended up happening was to sort of get through that time, our cost of capital on the on-chain model was getting very, very high. And when we went out to our clients and we said, hey, listen, we can keep on-chain offerings, but it's going to be pricey. Or we could switch to this sort of prime setup that won't allow us to have this on-chain, but we can obviously compete a lot better on the rates. And the response we got from our clients was 95% of them, that's not even 95, 99.999% of them said, that's fine. I'm okay to switch to the prime broker if I can get a better rate. And I think that's where the market was going at the time, because there was not a lot of discerning around the offerings. There were so many offerings offering Bitcoin-backed loans at lower and lower and more enticing rates. Yeah. People kept saying, why are you guys so high? And we're like, it's a different risk profile. But people weren't there to discern, right? But right now, if you tell somebody, hey, on-chain reserves will probably have a different price than a different type of custody setup, they'll say, that's fine. They might say, okay, I can take that or I can't. And for us, in the future, we think it could be a nice complementary offering to have an additional type of proof of reserves, because, we do proof of reserves in our model. And you can see that we are accounting for all of your assets accordingly. If you want to see it on chain, then that's a different type of reserve setup that, we're looking into facilitating in the future. But it's something that, we're not, I just wanted to say, we're not strangers. We're not strangers to the concept. We understand the value behind it. And we like to do what our clients want. So again, if you're a Ledn client and this is something that is something that, would make you, I know that all of our clients would probably say yes, it depends on the price. But again, if we have very, very good relationships with them. So they're very vocal with us, and, keep an eye out. I guess that's what I'll say. We'll respond to our clients' feedbacks, and we'll create it.
Before we let you guys go, I do want to ask about one other product you have, which I found really tantalizing. Tell us about how this B2X product works. And so basically what I saw is it allows you to leverage your Bitcoin into buying double the amount of Bitcoin. So I guess how is that being structured so that you can do that without getting stopped out very quickly if the price of Bitcoin goes down, say 20%?
Yeah, so that is it's actually a product that is unique to Ledn. It is our best performing loan product, and it is a product that is subject to availability in some countries, and is for the most part not available for U.S. clients, but it is available for in many parts of the world. What the product does is it allows a client to take a loan with the Bitcoin they already have to buy more Bitcoin. And the way the product was born is that we started noticing that a lot of clients in the early days were taking out loans and then coming back the next day to take a smaller loan, and then the next day to take a smaller loan, and then take a smaller loan. And they would just keep doing this.
It's like Inception. It's Inception
exactly.
of buying Bitcoin, like all the way down.
And so we get on the phone with these guys and they're like, what are you doing? We're like, I'm using your loans to buy more Bitcoin. And I'm like, that's brilliant. And so we saw this happen once and again, and then again and again and again. And then we start looking and like, it's, 40% of everybody using our loans is doing this. And it's a pretty tumultuous process at the time because you had to go through like 7 or 8 loans. And we were saying, wow, if people are going through all these loops to get here, it's probably because they really just want to buy more Bitcoin with the Bitcoin they have. And what if we made that product a 3-click process? Because if you think about it, it's the same risk profile in the sense of it's 50% loan to value. So in case one, you show up with $1,000 worth of Bitcoin and you borrow 500. And so Ledn has lent out 500 and has $1,000 worth of collateral. In the B2X, you show up with $1,000 worth of Bitcoin. We lend you $1,000 to buy more Bitcoin, and we get to keep that $2,000. So you don't get cash disbursed to you, but you have twice as much Bitcoin in custody. And so you can then basically wait till the price changes, or you can then repay the loan in cash to release your Bitcoin, or you can use the collateral to pay the cash portion and release the delta.
Right. Yeah.
Ledn, the fiat speculative attack company. That's the slogan. Gentlemen, thank you for your time. We kept you a while. We appreciate all of your contributions and enjoyed this tremendously. So thanks for your time.
Thank you, guys. Really appreciate it.
Yeah, thanks for having us on.
Give us a handoff to each of you personally and then to Ledn.
Yeah, for sure. You can find me on Twitter, Mario_Gibney. And you can listen to my rants of the Unhashed Podcast. And just see you down in Miami if you're there. Come by the Ledn booth. We're going to be down there in full force. Would love to meet you.
Yeah, Mauricio, you can find me at Cryptonomista with an A at the end, but it's if you write out Cryptonomist, you put an A at the end. That's my Twitter handle, and you can check Ledn out at ledn.io, and at Hodl with Ledn is our Twitter handle, and check out the Bitcoin Economic Calendar, which is our newsletter that I write every week. I'm getting some help now with from a great new head of research, but it's a great newsletter. Just check it out.
Awesome, thanks, guys.
Thanks so much for listening into the show. If you enjoyed this discussion, be sure to like or subscribe on whatever app you're using for podcasts or on YouTube. And if you have an extra minute, go ahead and leave us a review. We are also active on Twitter at blue_collarbtc, and our email address is bluecollarbitcoinpodcast@gmail.com. We invite questions, comments, or inquiries of any kind. We look forward to you joining us again on the BCB Podcast.